We are now entering the final countdown. Look at the date on your screen. It is Wednesday, December 31st, 2025. In just 36 hours, the calendar flips, the holidays end, and a line is crossed that cannot be uncrossed. When the sun rises on January 2nd, the China export ban becomes active law. But make no mistake, the damage does not start on Thursday. The damage is already unfolding in real time. For the last 48 hours, we have been warning about a market split, a bifurcation. Today, that split turned into a fracture, and now that fracture has widened into a chasm. As of this afternoon, there is no longer a single global price for silver. If you are checking your banking app, a news ticker, or a standard financial terminal, you are looking at the wrong price. You are looking at a shadow, a relic of a system that is already breaking. Right now, the global silver market exists in three separate realities. The first reality is the panic price. This is the price in Shanghai. The Shanghai Futures Exchange closed its final session of the year at an equivalent of $84.55 per ounce. This is not a speculative price. This is the price paid by the manufacturing capital of the world. These buyers are not trading charts. They are securing survival inventory. They are front-running the export ban and paying whatever is required to lock in metal before the doors close in 36 hours. The second reality is the physical price outside China. In the Middle East, specifically the UAE and Dubai physical markets, confirmed live transactions are averaging 79.61 per ounce. This is the honest physical market. Not yet in full panic, but undeniably tight. Nearly $8 above paper spot. This price is telling us that even outside the ban zone, silver is already scarce. And then there is the third reality, the zombie price. This is the COMEX spot price in New York, currently trading around $72.15. Now do the math. $84.55 in Shanghai, $72.15 in New York. That is a spread of $12.40, a 17.2% premium. In a functioning global commodity market, that spread is impossible. Arbitrage exists to destroy gaps like this. Banks, hedge funds, and trading desks are built to exploit exactly this situation. If the system were intact, they would buy every ounce at $70 in New York and sell it at $84 in Shanghai, locking in risk-free profits. But they are not doing it. The gap is not closing. It is widening. Yesterday it was $5. Today it is $12.40. Why? Because arbitrage is dead. The traders know the truth. They know that silver bought today in New York cannot be physically shipped, cleared, licensed, and delivered into China before January 2nd. The deadline is a wall. The bridge is gone. New York has become an island of paper trading, surrounded by a global ocean of physical shortage. So when you see $72.15 on your screen, understand what it really is. It is the price of a paper promise that nobody wants. The real economy, factories, solar manufacturers, strategic stockpiles, is already paying $84.55. That is the real price. The paper market is no longer the price setter. It is the price suppressor. The physical market has begun ignoring it completely. But the broken price is only the symptom. The disease is revealed in the volume. Today we received delivery data that confirms the system is under attack. Yesterday, physical delivery on COMEX was a joke. Only 69 contracts stood for delivery, just 345,000 ounces, proof that the market was almost entirely speculative. Today, that changed. Preliminary delivery notices for December 31st show 1,847 contracts standing for physical delivery. Let's do the math. 147 contracts, x 5,000 ounces, or 9,235,000 ounces. From 345,000 ounces yesterday to 9.2 million ounces today. That is a 26-fold increase in physical demand in just 24 hours. This is not normal trading activity. This is a raid. Nearly 2,000 large entities looked at the calendar, saw January 2nd approaching, and hit the delivery button at the same time. They no longer trust paper exposure. They want bars. They want metal. They are cashing out before the casino closes. From their perspective, the trade is obvious. Demand delivery at $72.15, extract the metal, and immediately own an asset trading at $84.55 in the real world. Buying $85 value for $72. It is the trade of a lifetime, if the metal can be obtained. And that is where the system breaks. Imagine being the bullion banks on the other side of those 1,847 contracts. You expected rolls, you expected paper settlement. Instead, you're suddenly required to source 9.2 million ounces of physical silver immediately. Where does it come from? Not Shanghai, not cheaply from the UAE, not from vaults that are already thin. Every ounce delivered locks in a loss. You sold at $72. You must buy at $79.84 or higher. This drains cash instantly. And this is exactly why the Federal Reserve had to step in. Yesterday, a $3 billion emergency liquidity injection appeared. Today, another $2.8 billion followed. That is $5.8 billion injected into the system in just 48 hours. To put that in perspective, that amount of cash could buy nearly 80 million ounces of silver at current prices. And it was burned simply to keep banks solvent through delivery stress. This is the invisible confirmation that the system is cracking. We are already hearing signs of strain, increased loan loss provisioning, delayed settlements, extended delivery timelines, administrative processing delays. Banker language, for one thing. The metal is not there. While New York is bleeding cash, Shanghai is bleeding metal. Over the last 48 hours, the Shanghai Exchange has seen 84 metric tons of silver withdrawn. 41 tons yesterday. 43 tons today. That is roughly 2.7 million ounces removed from registered inventory in 2 days. Normal withdrawal rates are 2 or 3 tons per day. This is more than 400% above normal. This is not consumption. This is hoarding. Inventory has dropped from 755 tons to 727 tons in just 2 sessions. At this rate, the exchange would be mathematically drained within weeks, but markets never wait for zero. Panic accelerates long before that. This metal is not going to retail buyers. It is going to state reserves, battery manufacturers, solar conglomerates, and strategic users who understand exactly what January 2nd means. And now this panic has reached the corporate level. Just-in-time supply chains are breaking. Major electronics and energy manufacturers are no longer optimizing cost. They are securing survival inventory. 6 months of supply. Ignore spot. Pay the premium. Get the metal. Because silver at $90 is expensive. Silver at zero is fatal. This is why physical premiums are exploding. Try buying silver at $72. You can't. U.S. Silver Eagles are trading with $12 premiums, placing the real acquisition price near $84, exactly where Shanghai is trading. Generic rounds are $8 overspot, an 800% increase in normal premiums. The physical market has already repriced silver. The paper market simply hasn't updated the scoreboard. Now look ahead. We have less than 12 hours before markets close, then 24 hours of darkness, then January 2nd. When markets reopen, silver cannot open at $72. The algorithm will attempt to close the gap violently. But price is not the real risk. The real risk is force majeure, cash settlement, default. Paper holders may be paid at $72, while physical trades at $90 or $100. This is not a trade. This is a regime change. The era of free-flowing silver ends tonight. The era of strategic silver begins Friday. You're watching the transition live. Hold steady. Watch the physical market. Ignore the paper illusion. The countdown is running.
Hello my dear friends, welcome back to my channel and my new video. So friend, today I will be explain. We are now entering the final countdown. Look at the date on your screen. It's Wednesday, December 31, just 2025, last day, and just 36 hours date the calendar flips, the holidays and a line is crossed, can't be uncrossed when the sunrise on January 2 and the China export ban becomes active live. But make no mistake, the damage does not start on Thursday. The damage is already unfolding in real time. For the last 48 hours, we have been warning about a market split, a bifurcation. Today that split turn it into a future fracture, and now that fracture has widened into a chasm is of this afternoon. This afternoon, because and now that fracture has widened into a chasm is of the afternoon. There is no longer a single global price for silver. If you are checking your banking apps, a news taker or stand-up financial terminal, you are looking at the wrong price. You are looking at the shadow, a relic of a system that is already breaking. Right now the global silver market exists in three spreads realities. The first reality is the panic price. This is the price in Shanghai. Thank you.